Hello, everybody. Welcome to the Fundamental Analysis webinar. We'll be getting started at this time. My name is Troy. I'm a Senior Account Manager with AvaTrade. I'll be leading the session. I apologize in advance. You might hear a little more noise than usual because of performing the webinar at a different day and time than is typical. Usually we're on Mondays and Fridays. So there's a little more action going on around me than is typical in the location I'm at. So you might hear maybe some voices in Italian or some other languages with some of our desks going on, but you should be able to hear me fine, hopefully, as we go along. Just click OK if you're hearing me clearly now and seeing my screen all right. All right, great. Thank you very much. I've got enough responses. Looks like we're up and running fine. If anyone runs into any issues as we go along, please feel free to let me know in the chat box. As always, as we get into looking at the charts and going over concepts and strategies, keep in mind that all investments have risk. This is true, obviously, with FX trading, spread betting, trading CFDs, etc. No one trade is guaranteed to profit, but obviously we go about things in a way where we set things up for hopefully nice potential profits. That's the whole idea of what we're going after, and manage the risk in a way that makes sense on the downside, whether that's with using stop loss marks or maybe preparing potential hedge positions, which we go over those concepts from time to time in the webinars as well. And also, if you haven't checked out the AvaTrade Go mobile app, there's a special feature on there called Ava Protect that on many of the assets, you can use that feature to manage risk in a unique way as well, where you use that feature for a small premium cost to cover against all potential losses during the covered time period that you choose. And so it's a unique feature as well. We'll take a quick look at that. Julius, the premiums vary based on the size of the trade and the asset and the volatility at the time that you're setting up the trade. And so we'll take a look at that briefly as we get into our fundamental analysis of what's going on in the markets right now. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective to hopefully arm you with better knowledge and tools to make your own decisions as you go forward with your trading. Now, fundamental analysis, just quickly, what is it? It's basically the news that's going on, the big stories that are occurring in the headlines and in the announcements and such that are driving the markets. And so there are two main types of fundamental news, and we'll go over both types today. Regular economic events, meaning GDP numbers are the big story today. They're scheduled. We know the exact topic, the time, what currencies they're expected to affect. Regular economic events have those types of tendencies where you know exactly what they will be and when they will be. And we'll look at the economic schedule that shows those types of announcements. And then you also need to be able to be prepared for extraordinary economic events. That would be the breaking headline that you just don't know what it will be or when it will be, but you can still be prepared for that type of thing with backup pending orders, with stop losses, etc. Okay, so even preparing for breakthrough moves that you have no idea why they might occur, but if they occur, you've got a pending order ready to go. That's kind of preparing for that extraordinary news that you don't know what it might be, but when it occurs, you're ready. So there's both types of fundamental news, and you can prepare for both. Any questions that you have, don't wait to the end like this slide would assume you should do. Jump in anytime in the chat box, ask questions, give input, anything that you think will be helpful as we go through. So before we jump on my demo account to look at the live movements, let's look at what's happening in the headlines. And one thing I do commonly in the webinars, especially when we're doing the fundamental analysis, is I go to a website like investing.com, and there are others that are good that give economic news and headlines right straight away. And so you see on investing.com, they have this little area when you first go to their landing page. It gives you, in literally 5 seconds, you can know the sentiment on the market in a very short period of time. So what do we see here? The futures are red. And the VIX index, which is the volatility index, or some refer to it as the fear index, is up almost 7%. What does that tell you right away? What does it tell you about the sentiment? Is it positive sentiment today or negative? If the futures are largely in the red and the VIX volatility fear index is way up. Yeah, negative sentiment. Sharon, I'm with you. And everybody else, it's clearly within 5 seconds, you can see negative sentiment. Like, what do you think is going to happen to the non-futures, the Dow Jones, the S&P 500, the NASDAQ, when the actual markets open? What do you think? These are yesterday's gains. What do you think are going to happen to those gains that occurred yesterday? Look at the futures and look at the fear. Probably they'll go down. I'm with you, Kunal. Obviously, there's no guarantee, right? But the idea is, what do we feel will happen based on the fundamental news? Okay. And I think there's negative sentiment and there's fear on the markets. The futures are deep in the red. And boy, we could see some momentum when the US market opens. We could see some momentum going in the wrong direction. Okay. And you don't have to wait for the US market to open up to trade on the major indices. We have those on the futures. So you could trade on those now if you want. You don't have to wait for the US market. But understand, when the US market opens, there's going to be probably an increase in momentum. Okay? So that's something you can try to time and take advantage of. Fundamentally, we understand that those things are occurring. So this is a quick snapshot. That snapshot is there all the time, easy to see. So if we click on this article, which I already did here, what do we see? US futures lower on GDP fears. What's GDP? Gross domestic product. Okay? So there's a whole article about it. When are the GDP numbers coming? Well, we can look right here on the economic calendar. When you're on investing.com, here, I'll go to the main landing page. Here's the main landing page. You click on economic calendar right up here. And here it is. And so, okay, some mixed news out of Europe. That's not in the headlines. Okay, some green announcements, better than expected. The actual and the forecast. If the actual is better, you get green. If the actual is worse than the forecast, you get red. If it's the same, you get black. Okay, so green tends to make the currency that's listed with that announcement strengthen. Red tends to make the currency weaken. And so as we go down, we see, okay, mixed news out of Europe, no big deal. It's not really in the headlines. Looks like more negative than positive, right? That's not good news. German GDP, what's that? The largest economy in Europe, right? The German economy, or one of the largest. That's a three-star announcement, meaning high impact expected. And it was horrible. The GDP was really bad. Not only did it go down, it went down worse than expected. So you can understand the European indices are probably having trouble right now. Not just the US. The European GDP numbers already came in horrible. That's really bad news. It was expected GDP to drop by 9%. It dropped by over 10%. Why do we think those numbers have been so bad? Why do we expect bad numbers out of the US as well? Look at this, GDP expected to drop 34% quarter over quarter, from first quarter to second quarter. Why? Sid, because it's such a global economy, those European numbers not only will affect the DAX, they'll affect the US indices, the Asian indices, etc. For sure. It's a global sentiment at this point. Why are these GDP numbers so bad? I mean, what in the world would cause a 34% drop in GDP last quarter out in the US? I think we all know the answer, right? Global pandemic, right? COVID-19. So, it's kind of an artificial. It's an artificial drop in GDP, right? It's an artificial drop. So it's not because the US economy is bad or the European economy is bad that these GDP numbers are going backwards. It's not because the foundation is bad. It's because of the voluntary shutdown of economies because of COVID-19. So we all understand that. But when the numbers come in worse than the bad numbers that were already expected, well, then now that's bad news, right? So it was expected, 9% drop in GDP in the German numbers, and it was greater than 10%. Okay, so it made bad news worse. And now we're looking in the US, we're expecting 34% drop in GDP. What do you think happens to the momentum, the fear, if it comes in at 40% drop in GDP, 35% drop in GDP? What if it's worse than the expectation like the European one was? Yeah, probably a pickup in downward momentum on the indices if that happens. What if the drop in GDP in the US comes in at only a drop of 20% instead of 34%? What do you think would happen to the major indices if the US shows not as much drop in GDP as expected? What if it only drops 20%? What do you think happens to that fear that's on the market? The fear probably dissipates, right? So you might say, you mean a 20% drop in GDP, which is in normal circumstances horrible. That could be viewed as positive. It probably could, because that would be much better than the expected 34% drop. So it's all relative, right? And so the expectation when the US numbers come in just 18 minutes is about a 34% drop in GDP numbers, quarter over quarter. Okay, so there's the potential here, and that's what trading is about. There's a potential for a big swing in the market one way or another. And these numbers are coming in before the US market opens. Okay, before the US market opens. So whatever these numbers are, you don't have to guess beforehand. You can wait, see what the numbers are, and then find an entry point before the US market opens. Because probably whatever direction these numbers send the market, it'll go further that direction when the market opens potentially. All right. Type okay if you're with me so far, or questions if you have them. All right, great. So let's move forward. So the point right now, fundamentally speaking, is on the regular economic events, the ones we know for sure what they'll be and when they'll be, we have huge potential for movement starting in about 17 minutes. And then you'll get a second chance at entry points just before the US market opens, because probably if you can find an opportunistic entry point, technically speaking, for the direction you think these numbers are going to push the market, if you can get an opportunistic entry point already knowing what the numbers are before the US market opens, wow, you're in the driver's seat then. Okay? Because we can try and guess that these numbers will be worse than expected, but really there's no way to know for sure. Right? So some traders will try and guess, and that's fine. You could take your shots now before these numbers come in 16 minutes. But you also could wait for the numbers to come in, see what they are, then find an opportunistic entry point to go in a direction that you think it'll go further when the US market opens. Okay? There's two ways you can go about it. So in any event, huge potential for movement with these announcements, and the announcements that already came in. Horrible CPI numbers out of the European Union, bad GDP numbers out of the European Union. There were some mixed numbers up here that weren't that big of a deal, but boy, those GDP numbers are not good. Okay? And so I promised I would show you the AvaTrade Go. If you go to trading platforms on our website, go to AvaTrade Go. That's our mobile app. You'll see you can download it from your app store, and there's AvaProtect. You pick the length of time. It tells you the premium cost for that coverage. Any losses during that trade, during that covered period, are added back to your account. When the cover period ends, you can let the trade keep running, and if there was negative floating, it's added to your account from the protection. At that point, you might put a stop loss or something. And by the way, the app, when you do take profit and stop loss, it calculates your exposure and potential profit for you based on your trade size and your distance to your take profit and stop loss. So it's like a trade calculator built into the app as well. And also, you see here, it tells you how much margin you need for your trade size before you place the trade. So it's really a great tool, even for experienced traders. It speeds things up. You can put your trade size and say, okay, this trade only requires $27. It'll convert to your account currency as well to show you how much margin is required how much you're risking, how much you would make if you program take profit and stop loss, and also how much it costs for protection. And you can choose a time period of protection. 1 hour up to days in protection, whatever you choose. Okay. All right. So let's jump on the charts and see what is happening. Now, you might see I have a Barclays trade running, and you say you're in a sell position, and I opened this in our last webinar, okay, earlier in the week on I think it was Monday. So you see here on the 29th, it opened. It was a pending order. So it sold on the 29th. I opened it on Monday as a pending sell stop. And why did I open it? We saw fear building in the market. If you watch the recording, all of the webinars are recorded. You could go back and watch Monday's session on our YouTube channel. You'll see we went over some technical analysis and we looked at the fundamentals a bit. We said it looks like fear is building with tension between US and China. And so the idea was, and it wasn't about the GDP numbers at that time. It was about FOMC meeting, and it was about fear with US and China closing consulates and such. And we set up a pending order. We said if that support level breaks, it likely will keep dropping. Okay. And so a couple of our trades hit stop losses and got out with small losses. And this trade looks good. Now, what do you think might happen with this trade after those European numbers came in bad? It could continue to drop. So this one could turn out really nice. And so that's the power of a pending order. I had it below a support level, and we said, even if it doesn't break now, if bad news comes out later, whatever that bad news is, it happened to be GDP numbers. If it breaks the support, there must have been bad news, and we'll get in on a sell. And so, boom, it triggered this trade leading up to the GDP numbers today, even before they were released, and away it went. So that's just an example of the trade that's running of the power of a pending order. Waiting for news that you don't know what it will be or when it will be, but you got that trip line in the market. Let me type a met. Well, let me first ask, type okay if you're hearing me all right. I have someone saying they can't hear. All right, great. I have enough responses. I'll just let the person know it's just them. Okay, so I let that person know in the chat. All right, so let's take a look then at some other ideas other than S&P, or this is the S&P chart. The trade I'm talking about is Barclays here. Okay, if we look at the Barclays chart, we'll see it broke the support and dropped. Now we're looking at S&P 500 1-hour candles, and let's find a support level. Here's a support level. If those GDP numbers are bad, what do you think happens to this little support level where it hit and bounced back up? If those US GDP numbers come in worse than 34% or somewhere that looks that bad, what do you think happens to this support level on the S&P 500? Probably breaks. So instead of guessing whether or not there'll be bad news in 12 minutes, what kind of pending order could you put with an entry point like down here below the support level, that if it breaks the support level, you're in on a sell? Sell stop, exactly. Just like the Barclays trade that I'm showing you down here, okay? And that was my point of explaining the Barclays was a sell stop, waiting for bad news that we didn't know for sure what it would be, and boom, it broke. We knew fear was building in the markets with US China. We thought maybe that would make it break. And maybe that is what caused it to break, because it broke before today's GDP numbers, but maybe it's a combination of both, because traders expect bad GDP numbers today. Maybe that was enough combined with US China to break the support. But in the end, does it really matter why it broke? It broke, and now Barclays is in the money. So the same idea with S&P 500. If those GDP numbers come in good news, the support level probably won't break, and you never enter on your sell. It's a sell stop, Jack. Sell stop sells from a lower point than the market is now. Sell limit would sell from a higher point. Okay, so if you're waiting for confirmation of bad news before you trade, then you probably are going to do a sell stop at a price down here. If it breaks the support, you're assuming those GDP numbers must have come in bad 10 minutes from now, right? So let's place, and by the way, you don't have to do this. This is a simulation. There's no guarantee this trade will win, right? But I'm showing you the concept. So we can go pending order. We can go sell stop. We could say if the price hits 32.03, and you can pick whatever price you'd want. And then I put my stop loss back above, maybe 32.21. Place. Okay, there. So now you see the green line. That's my entry point. If the movement breaks this support level and hits my entry point here, then it sells. Okay, and you might say, well, what about this support level here? And so I might say, you know what, let me cheat that down a little. I want it to break that support level too before I get in. Okay, you see the idea. So all I did was left click and drag my entry point on my pending order to get it exactly where I want it. So if it breaks this little support and breaks this one, then it must have been really bad news probably, right? So then it sells. My stop loss is back above this level and this level. So if it reversed and went all the way back up here, maybe the news wasn't that bad and we get out with a small loss, right? And if it does break and keep dropping, let's look at maybe 4-hour candles. Where would I take profit? Maybe this support level down here. Okay, here's the next support level here. So maybe I'm looking there. Okay, support up. So now if I want to put a take profit, maybe I say 31.36 right before this support level. So let me go back, modify, take profit 31.36. Okay, modify. Okay, now you see my take profit down here. Okay, I put my take profit before the next major support level because it's an idea of maybe how you might scalp. You're taking your profit before it has a chance to bounce off the next support level. Sid, no, the best way to reach me is through the webinars, or if you happen to be a client that's in my portfolio of clients, okay? If you don't have an account manager, you could request to speak with me through support or whatever, but most of you already have account managers. Okay, so someone's asking to explain again. The idea is my entry point should be below the support level enough that I think, wow, it must have been bad news. Maybe I want to get below this support level here, this major one. Okay, as I look at the 4-hour candles, I might say, wow, I want to get below the major support level. Or you might say, no, I'll enter if it just breaks the first support level up here. Right? That's up to you individually on your technical strategy, right? But the idea is if there's bad news, let me get rid of there. So if there's bad enough news to break through a couple support levels, you get in on your sell and you want to take profit maybe before the next support level down here. By support, I mean an area where it hit and went up, hit and went up, hit and went up. So if it is going to break this support area and drop, maybe when it gets to the next support area, that's where you take your profit. Because maybe it won't break that level. Depends how bad the news could be, right? So in this setup, what's my ratio risk to reward? Look at the distance to my stop loss and look at the distance to my take profit. It's about 3 times as much potential profit, maybe 4 times compared to my risk. Okay, I only need to be right, what, 1 time out of 3 and I'll profit. That's a nice setup. And if the fundamental news is on your side and your technical entry point makes sense, then why shouldn't you come out on top when you don't even need to win, what, 40% of the time with this type of setup? So why is my stop loss up here? Because After it breaks the support, if the news really is bad, it shouldn't go back above that broken support, at least not usually. If the news is really big news that's working in your favor, once it goes your way, many times it just keeps going your way without retracing all the way back through the broken support level in this example. So if you're setting up a sell stop, you're hoping for really bad news on the GDP numbers, right? What happens if there's good news? What if the GDP numbers are better than expected? What kind of pending order can we put up here just in case? If it goes up and breaks this resistance and comes up here, then the GDP numbers must have been better than expected. So shouldn't I put a buy stop, as Agnes just said, a buy stop up here? So my entry point on my buy stop, I can program here. So sell stop down here and buy stop set up here. Because again, we're not Nostradamus. We don't know. We can't predict whether these numbers will be better than expected or worse. We can't predict for sure the overreaction of the market. Now, I believe there's a lot of fear on the market right now. And if those numbers come in bad, there's probably more potential for a plunge than if the numbers are a little better than expected, but still kind of ugly. Probably not as much potential for a huge jump up. So you might prefer only to set up the sell stop and not prepare the buy stop. That's your choice, right? But you're going into it knowing there's a potential for large movement, maybe a larger potential for dropping than for rising. Because no matter what, the numbers are going to be ugly, right? Better than expected numbers are still going to be a huge drop in GDP numbers, most likely, right? So sometimes I prefer only to set up in the one direction. But you could set up in both directions if you choose. Okay? Any questions or comments? And I see my Barclays trade still dropping. It just went up further in profit. You see, I switched from like 1 hour candles to 4 hours so I could get a better view. That's a good question. The question is, what candles, what time frame is best to look at? And the answer is there is no one answer. When I was on 1 hour candles, I could see the current support level really good. That I was saying I might put an entry point if it breaks that support. And then to see where I wanted my take profit, I had to look at 4 hour candles to see the bigger picture and see the next support level down. So you have to look inside out or outside in. 1 hour candles, 15-minute candles, or 1 hour candles, 4 hour candles, 1 day candles to see the whole picture so that you're confident enough that you can find the price levels you want. The Barclays trade, no, it was a pending sell stop from Monday. The Barclays trade, someone just signed in late, so I'm explaining. And so it's kind of like an example of what we're preparing for now. We have news coming up, and we knew there was news coming up that could move Barclays. And so we set up a pending order, like a trip line in the market beyond a support level that we said if it breaks, the news had to have been in my favor. If it breaks, I want in on a sell. So in that case, you're willing to sacrifice getting a worse entry point. I sold from a lower point, and you'd think, don't you want to sell from a higher point? The idea of the sell stop, selling from a lower point, is to wait for confirmation of the movement before you enter. So you're willing to give up some of that distance to enter at a lower point on a sell so that you're more confident that that's the right direction. That's the idea of the sell stop and the buy stop. Azibi, for a beginner, Euro USD is a nice steady currency pairing to trade on. Very tight spreads on Euro USD, maybe more predictable movements because there's a large volume of traders on Euro USD. It tends to be less volatile. So that's a good one to start on many times, Euro USD and other what we call majors, GBP USD, Australian USD, some of the major pairings, as they call them, they're good for beginners. Okay, so this is the setup then before the announcements come in for all of our indices. Let's go look at the announcements. The announcement's about to come in. So let's go to the calendar. We see 1 minute. Here come jobless claims, GDP numbers. This should shake the market a bit right now. Let's see what comes in. Agnes, sometimes announcements don't move the market much when you think it will because there are bigger stories, bigger fish in the market. And recently, some of these economic announcements were completely ignored, and the focus was on the pandemic. Everyone expected the numbers would be bad, so that nobody really cared that bad numbers were coming in. They were focused on the outbreak and the spread of the pandemic and are there vaccines being developed. So sometimes announcements don't move the market because there are bigger stories to be looked at. But now with economies opening back up, there's vaccines getting close. People are really paying attention to these GDP numbers now. Okay, here come the numbers. Let's refresh the screen. And okay, so we've got initial jobless claims, bad, but not as bad as expected. You see that? 1.450 thousand, that's in the millions, right? 1,450,000 is what that means, 1.450K. So the numbers were lower than expected, but not by much. But that's relatively good news, better than expected on new jobless claims. Still a lot of jobless claims. If this was a normal situation, those would be really bad numbers. But given the pandemic situation, not as bad as expected. If we look at GDP, okay, this is what I was saying. Those are really bad numbers, 32.9, but not as bad as expected. The expectation was negative 34%, and it was negative 32.9. Now, it'll be interesting to see how the market responds to that, because even though it's better than expected, those are really bad numbers, and it was almost as bad as expected. You know, it didn't come in at 20% minus. It came in at almost minus 34%, minus 33 almost. Those are really bad numbers. So let's look at the chart. Let's see what happened, because the GDP numbers were worse than expected. The price index was way worse. Look at the GDP price index. Instead of going up, it went down. That's bad news. But the jobless claims, not as bad as expected. So it's a mixed bag, but let's take a look and see what happens. Initially, if we look on the S&P 500, we see a push down. In order to get in on our trade, in our trade, it's got to drop. Let's take a look. It's got to drop to our entry point, which is way down here, 31.98, right? It's starting to drop. Now, you might do a market move if you wanted to. If you think that news was bad enough that you think it'll at least go down and test the first support level, you could do a market move. And if it breaks the support, then it triggers your sell stop to get in even with larger exposure, with a second trade. But that news was mixed. Okay, it was mixed. So we'll see. You don't have to guess whether or not that's bad enough news to break the support. You got your sell stop maybe prepared. You wait. If it breaks the support on the 1 hour candles and hits your entry point down here, then you're in. If you prefer to say, well, if it breaks the first support, I'm in. Okay, fine. So you could say, I want my entry point here. If it breaks this first low point, then I'm selling. That's up to you. How much confirmation you want in broken support levels before you agree it's a downtrend. Okay? Something we can look at is what happened to the volatility index. Volatility is even higher, isn't it? Remember when we started the webinar, the volatility was at 6 point something, and I said it's almost 7% up. Now the volatility is up over 7%. Was under 7, now it's over 7. So in terms of fear and volatility, it's gone up further. And so as we go back to the chart and we see the initial movement, The initial movement on the announcement was down. Okay, so if I'm scalping this movement right now on a market move, okay, no problem. Here's what I could do. I could say the news was not horrible, but not good news either. So maybe I do a market execution on a smaller size trade and sell. Okay, and then I say I'll put my stop loss just above one level. I'm only going to risk a little. So 32, 33, maybe my stop loss. So I say, okay, stop loss 32, 33. Okay, so if it breaks and goes the wrong way, fine. I risked a little bit. If it tests the first support level, I take my profit maybe at this first support here, 32.12. 32.12. Just as an example. Okay, so now I'm trying to make about double what I'm risking. Okay, and why am I taking this move? I'm just going with the momentum that was created after the announcements. I don't know whether, slightly better than horrible news is good news or bad news. I don't have to pretend to know what all the traders will do, what the market will do. I know the news wasn't great. That much drop in GDP numbers. I know that many more people signing up for unemployment, in the millions isn't good, even though both of them were a little better than expected. So I say, okay, I'll take a small risk. I'll put my stop loss just above the first resistance level. I'll put my take profit down by the first support level, and I'll see what I can make on it. So here's the movement. My stop loss is up here a little bit. My take profit's down here a little bit, and I'll see what kind of profit I can take off of it. Don't forget, there was bad news out of Europe too, and the economy is a global economy. So maybe I still feel, because we looked at the fear index and it's higher now than it was 20 minutes ago, I still feel maybe it's more likely to drop than go up. If that's how you feel, you can scalp, go after a market move. And what if this goes the wrong way, hits my take profit, and then comes up to this resistance level? I could sell from here. I could have a sell limit waiting right up here. Because if it breaks the small resistance, maybe when it hits this one, it'll drop, because that certainly wasn't great news we just saw come in. So eventually it'll reach a resistance level where it pulls back probably somewhat hard. So I can take a small risk. If I lose, I can have a pending sell limit up here, waiting for the next resistance level, if it reaches it, to get in. Okay, type okay if you're with me. Kind of a step process from price level to price level, getting in until you make your profit. And each time I can risk a little bit and make a heck of a lot more if that's the way I want to set it up. So I get in, if it breaks the support level, I get in with more selling. I'm in on a market sell now, and if it comes up to this level, I can have another pending sell limit. I can easily put a sell limit up here, let's say 32.50. I can risk just a little bit, 32.75, place. Oops, what did I do wrong? Sell limit. I mistyped something, 32.50. Oh, I put take profit. I meant to put stop loss. 32.75 stop loss, place. Okay, there we go. So now, even if I lose this one, I'm in if it comes up here. I'm going to sell again. And my potential profit then just got bigger if it pulls back down compared to this potential profit. And so I could put take profit 32.20 on this pending. The pending sell limit, this one. Modify, take profit 32.20, just as an example. Okay, so now I've sandwiched in the market. I've got a small risk on my first move. I've got a small risk on the other two moves, whichever direction it goes. Eventually, it will open one of my pending orders. It has to. One of my pending orders will open. Either it's going to break the support and open my sell stop, or I'm going to lose my market move right now with the small risk, and it'll open my sell limit when it reaches this resistance level up here. Okay? And you say, what do you mean when it reaches? It's going to reach one of those pending orders, the sell stop or the sell limit. It will activate one of them. And I could lose all of these. It's okay, because I have limited risk. I only need to win one, like I said, with this type of setup, 1 out of 3, 1 out of 4, and I'll profit. Okay? And again, why am I talking sell limit, sell stop, not buy limit, buy stop? Remember, I said you could set those up if you want to. I tend to go in the direction that the fundamental news is pointed, which we looked at all the headlines: fear, doom and gloom, negative sentiment. Okay, we looked at big numbers come in and they weren't great. They were a little better than expected, but still not good. So this is the direction that the fundamental news is pointing, and that's what this webinar is about. So we're setting up a strategy that if you like the ideas, you could employ on any asset, not just S&P 500. You could be on the DAX, right? You could be on the NASDAQ. You could be on the Nikkei, any of the indices, any of the stocks, or you could be looking at oil for that matter, okay? Any type of asset. I mean, that's a good question. Gold is a safe haven, right? When there's a lot of fear, where do people run? The yen as a currency or gold as another safe haven. You might pair the euro against the yen. Why do I say euro against the yen? The euro had bad numbers today, and the yen is a safe haven. It should strengthen with all this fear. So if you can find the euro popping up to a high point, maybe you trade down on euro JPY with a limited risk to the other side of a resistance level. And it has a huge potential for the yen to strengthen and pull the euro down after the euro had bad GDP numbers. You get the idea? Using fundamental news to go in your favor. All right, everybody, I think this is a good spot to stop. We've been going for about 45 minutes here. Thank you for joining. I think you'll find lots of assets where you can set up some nice market move and pending order combinations like we did on the S&P 500. You certainly could look at any of the major indices. You could look at any of the safe havens. Yen paired against specifically anything that had bad news today, like the euro. And I think there's probably bearish pressure on oil with all this bad news, okay? And maybe bullish pressure on the safe havens. All right, everybody, thank you for joining. I appreciate your attendance and your input. Good luck with your trading. The next webinar will be next Monday, okay? All right, bye, everybody.